Yes, we've had falling yields coming at the OMO auctions, but just this afternoon, just coming in, we saw a bit of a surprise at the PMA auction, where previously we had rates at the short end. We had 10.2, 12.2, and 12.345 at the far end. But at today's auction, we saw slight increase at the far end, with rates inching up to 12.845 and 12.6 at the medium end. So it's looking like the trend of falling rates has bottomed out. If you look at the OMO auction yesterday too, at the medium bucket, central bank slightly moved up from 12.8 to 13%, whilst retaining 13.04 at the far end. So we're looking like we might have come to an end of the declining rates, and rates might have stabilized and will be picking up.
Okay,
Again,
if that is the case, how do you see investors repositioning or positioning themselves for this?
Of course, there's still a lot of buying interest. If you look at the demand, on offer today was just 95 billion. We saw a total of 197 billion demand. Same thing at the OMO yesterday. Central Bank offered 200 billion. They ended up having to sell about 330 billion. So there's a lot of buying interest, especially from the FPIs as they look to lock in around the one-year bucket. So basically, it's still a lot of buying interest. Again, looking at it from the all-share index that continues to drop, we continue to see preference for investors switching to fixed income over and above capital market.
Okay, what about overall system liquidity this week and your interest rate outlook in view of the MPC rate cut?
System liquidity last week was initially dry with no OMO auction whatsoever, but towards the end of the week, of course, FAC came in. We saw that reflecting this week, opening at about 404 billion. Before yesterday's OMO auction mopped most of that up. Rates at the beginning of the week on Monday was around single digits at the OBB and overnight. After yesterday's OMO auction, we saw rates inch up to 16–17% levels for OBB and overnight respectively.
Okay, let's move over now to the FX markets. Now, obviously, we're just beginning the second quarter, but just looking at a note you sent earlier, 6.1 billion is what we did in terms of inflows at the INE window in the first quarter. Could you just bring us up to speed on how the Naira has performed against the dollar so far this week, and what your outlook is for this quarter?
Yes. Earlier in the year, main concern was the big political events. Since then, it was reflected. After that, February, we saw about 2.6 billion coming. March, that figure doubled to about 6 billion. There's a lot of interest, especially looking at the fact that the U.S. Fed has stopped its normalization policy and is tilting towards an accommodative stance. And that's giving room for the central bank. If you look at what they did last time, also coming down on their monetary policy rate by 50 basis points. So it's looking good for the FX market on the supply side, but there's still a bit of concern that demand has remained weak. And even though this might look good, but in the overall interest, we'd like to see some demand levels pick up at the market. Overall, the market has been stable because supply has been good, like we said. Rates have been within 360, 361.5 so far all week. We expect stability to remain, price stability to remain, as also duly noted by the central bank, even while expecting economic activities to pick up.
Well, what about your outlook for accretion of the reserves?
Reserves have been solid since March. It's been steady accretion. Last I checked, figures like around 44.7 billion, up from 42 billion where we started.